Good day, grade 12s. Welcome to lesson number 10. This is the last lesson of, what do you call it? Circular flow. And yes, it's going to be a test. And I gave you homework. You can mark your homework. Here are the answers. I'm not going to spend time on that because I'm more focused on the test. So I want you to get an exam pad, whatever it is, an exercise book, and let's write the test together, because I'm not going to put the test and then you write the whole thing. We are going to do it question by question. All right. So, and we are writing and marking at the same time. So pause the lesson as you pause the video as we go through. All right. So let's see. First question. But I'm not going to let you do it without me giving you some clues or helping you out, because I want you to use the same mentality when you are when you're answering questions in an exam. All right. First and foremost, my exam tip on multiple choice is always answer the question before you look at the options. So I did this deliberately. You see, it's multiple choice, but you don't see A, B, C, D. I want you to get the answer before we even get to show the options. You are going to see that it makes your life easy. And the other thing that I want to point out is the key to getting a good mark in section A is knowing your terminology. So you must know your terms, please. Make sure you know your terms. So terminology is the best thing for you to get through section A. All right, so when S plus T plus M is less than I plus G plus X. All right, first and foremost, what is S, T, and M? These are leakages. And what is this? These are injections. So in other words, let me simplify this. We are saying, you see, you won't get this one wrong. When the water going into the drum is more than the water there is a leakage there, is more than the water that is coming out of the drum. The drum is leaking, but drop by drop, and water is coming in very fast. What do you think happens to this? Obvious, I've given you the answer. All right, this one I didn't do justice. I've given you the answer. All right, so when leakages are less than injections, do you think the economy is going to rise? Do you think it's going to remain the same? Do you think it will fall, or you think none of the above? The answer is obvious. The economy is going to rise. You see this arrow? I was giving you the answer. I made a mistake. I wasn't supposed to do that. Right, let's go to the next question. The change in the value of income. Change in the value of income. So I'm giving you a clue. Divided by. So divided by the change in the value of injection. Change in injection is known as, come on, you have seen this thing. What is that? Do you think it's the macroeconomic multiplier? Do you think it's the GNI? Do you think it's circular flow model? Or you think it's GDP? All right, pause the video, mark yourself, answer the question. If your answer is not, okay, let's see, wait. Change in income over change in injection. Come on, this is not this. Do you think it's a, come on, it's not. It's not. So what's the answer? It is the macroeconomic multiplier. Remember, we have K is equals to 1 over 1 minus MPC. As formula number 1, we have this one as another formula. Then we also have K is equal to 1 over MPS. So K is equals to 1 over 1 minus MPC. This is the most common one. This is the one that we use the most. So yes, these are our 3 methods. So in an exam, they can change this and say K is equals to 1 over 1 minus MPC is known as the macroeconomic multiplier. Right. The value of the multiplier increases if the marginal propensity to dash increases. Come on. You've seen this one. MP. You've seen MPC. You've seen MPS. Have you ever seen marginal propensity to produce? No. Have you ever seen marginal propensity to invest? No. The answer is either save or consume. Then come back. The value of the multiplier increases if the marginal propensity to dash increases. Right, if your answer is D, correct. So the answer is D, marginal propensity to consume. Because we always say, what's the relationship of the MPC and the multiplier? We say the higher the multiplier, the higher the MPC, and vice versa, meaning the lower the MPC, the lower the multiplier. So it's the higher the multiplier, the higher the MPC. So yes, these two, when this one increases, this one also increases. This one goes down as these two increase. All right, next question. Taxes and subsidies on are taken into account when converting GDP at factor cost. Come on. Do you need a clue again? GDP. Okay, taxes and subsidies on. You've heard taxes and subsidies on production. You've also heard taxes and subsidies on products. Anything other than these two is obviously out. Out. Maybe. Out. Maybe. So these two, you scratch them out. Alright, so you're left with these two. These are your two possibilities. Do you see that I already had the answer before we show the possibilities? So that's what I'm encouraging you to do. Make sure you try to answer before you, what do you call it? Before you try to, before you look at the options. Let me put it that way. All right. So, but let's come to think. Don't guess. Taxes on subsidies on what? When we're talking about factor cost, is it employment tax or it's VAT? Think. It's production. All right. Next question. Consumption of fixed capital is used when calculating GDP at what? Consumption, let me give you a clue. I told you that this one is depreciation. So when did we talk about depreciation? Remember, it was the same time we talked about profit, net operating surplus. It was the same time we talked about wages, gross salaries and wages. What are salaries and wages? Come on. Do you think they are basic prices? You think they are market prices? You think factor cost or consumer prices? Right. We will be calculating C, factor cost. Right. The next one. The study of individual households in an economy is known as individual. Right. What's the clue? Do you think when we study you, do you think you are a big deal or you think you're a small deal? You as an individual. And we have, all right, let me put them. We have this A. We have this I. These two are out. Right. I, what does I represent? Micro seam. Micro this, micro that. Come on. Micro represents small. Macro, big. So, when we study individual households, do you think it's a big thing or it's a small thing? All right, let me give you another example. What do you think is bigger? The individual households or the whole of South Africa? Obviously, the whole of South Africa is big and you as an individual household is small. So our answer in this case is micro. So when we study individual households, it's microeconomics. Right, the next one. If national income increases by 500 million as a result of an investment of 80 million, what is the value of the multiplier? So here we are simply saying 500 divided by 80. All right, to make life easy, they taught us to, whenever you have zeros, you take them out and you do it in a proportionate way. You can't take 2 out and 1 out. No, take 1, take 1. Right, so how many times does 8 go into 50? Let's see. 8, 16. Okay, of course you'll be having a calculator, but let's do it without. 8, 16, 24, 32, 40, 48. Look, 1, 2, 3, 4, 5, 6. So 6 point. It leaves out 2. 8 into 20, 8, 16. It goes twice. It leaves out 4. 8 into 40, it goes 5 times. Let's see. 0.25, no. 4, no. 6.25, there we go. So that's our answer right there. You see, I'm helping you. Make sure you don't disappoint me and fail in the exam. Let's go to the next question. The situation where a change in spending, and this is the one that I always say, a small change in spending. You've heard this 1,000 times. The situation where a small change in spending causes a disproportionate, I've explained this word 1,000 times, change in aggregate demand and hence in the level of aggregate income. Is it the multiplier? Is it the marginal propensity to consume? Is it the marginal propensity to save? Is it the multiplier effect? Come on, these two are out. Any one of these two. Which one do we go for? Obviously, go for this one. Right, the next one, the number by which the change, the number by which the change in initial spending or withdrawal must be multiplied. Come on, this thing is leaving track. You can see where we are going. I might not say the answer, but here's the answer. So the number by which the change in initial spending or withdrawal, there, is it the multiplier? Is it the multiplier effect? Marginal propensity, the answer is the multiplier. Like I said, it's K. Right, next question. Dash are the amounts of money that flow out of the economy, out of the circular flow. Out. Okay. Which one? Out. Out. Is it injections or is leakages? Out. The word is out. It's easy. Right. Leakages. Next one. Savings flow back. All right. Let's assume that your salary is 15,000 and every month you save 5,000, 5K. And after a year or so, you find yourself with 150,000 rands. And then you say you want to start a business. Question is, what do you do? So savings flow back into the economy. You were saving. So this 5K was a what? Leakage. Now you want to inject it into the economy. But when you inject it, does it come as an export? It doesn't make sense. Does it come as government spending? Are you the government? Does it come as investment? Does it come as recycled? The answer is obvious. It's C. It comes back as investment. Right. Oh my goodness. Sorry, I pressed this by mistake. All right. This one, I really had to put it on one slide because maybe the answer for this is T. So if I split this into half and make it so that you can see, do you see that I was going to struggle to match them if the answer is in the next slide? So I just squeezed it. I hope you can see. All right, so total value of spending inside the borders of a country. Spending, this word spending. Let me use a brighter pen, maybe red. Right, look here, spending. What is spending? It's expenditure. So you look for something with E here, somewhere, expenditure. I think there's only one there. I've already given you the answer. Right, let's do the next one. The proportion of an increase in income that is not consumed. Not consumed. If something is not consumed, what has it happened? It has been saved. So try to look for something that has saved here. What is it? The marginal propensity to save. Next question. Supply of goods and services. This one can be tricky. So such tricky ones, you can leave them for the last. All right, but supply of goods and services. What can this be? From what we see here, when goods and services are being supplied, they are moving. So in other words, what are they doing? They are flowing. Now, as they are flowing, do you think they are real or money flow? Yes, they are real flow. A quantity measured at a point in time. This one sounds tricky, but yeah, if you look at these options, is it GDI? No. Is it multiplier? No. Is it? You'll see that the answer is stock, because we count things at a point in time. Yes, stock. Right, the next one, total income received by the factors of production for producing goods and services within the country. Total income. The key is the word income, received by the factors of production. And then we also have goods within. Okay, this word also suggests something, domestic. This word here suggests something, so, and this word total suggests what? Gross. So the answer will be GDI. The ratio between the eventual change in income and the initial investment. I think the key here is eventual. And if it changes eventually, I think it has been affected. Don't you think? So the answer will be multiplier. Effect would be more correct, but we don't have multiplier effect here, so we'll leave it there. But the correct answer here would be multiplier effect. Right, represents the amount received by the various factors of production. Represents the amount received. So if by various factors of production. All right, so this one will be factor cost. I told you, I remember this was the time I was telling you, be careful of terms, because they are the key. If you remember, I think it was lesson number 6, if I'm not mistaken, I mentioned that. Right, market where goods and services are traded. Come on, this one is easy. Are they traded on the factor market or on the product market? All right, we can also call it the goods market, but in other cases, look out for product market. Next one, market. Okay, we did it. Balancing figure in the calculation of gross domestic product. So when we are balancing figures, why are we probably doing it? We are balancing them because maybe there is an error. So what is it that we use to deal with errors and omissions? Is residual item. Next question, gross domestic income is derived by adding all income earned by the owners of the factors of production. GDI. Come on, this one is an easy one. It is the income method. The income key. Right, inputs into the production of goods and services. Inputs. What is it that we use to produce goods and services? I think this is a clue. I hope you can see what I'm writing there. Yes, F of P, factors of production. The market where both short and long-term financial. This is the keyword. Look for something here. That is the word finance. There is the financial market. Continuous flow of spending, production, and income between different sectors. Continuous flow of spending, production, and income. So when spending is flowing, production is flowing, and income is flowing, what is it that we're talking about? We are talking about the circular flow model. Now, someone sees the word flow and they think it's money flow. Now, if you think it's money flow, yes, this one can make it money flow. This one can make it, but this one kills the money flow. So start thinking of something different, because it says production, but when we talk production, it's now a real. So in a way, we are saying real and money flow, then circular flow makes sense. The next one, those financial institutions that are not directly involved, okay, in business studies, we call them intermediaries, and in this case, is the financial sector. Right, goods and services produced within a country and purchased by foreign, so we are taking them out. What are we doing? Simple, we are exporting. Used when GDP is calculated according to the production method and represents the production cost of the firm. What could this be? It is basic prices, because taxes and subsidies, they have to do with the government. So the basic prices before tax and subsidies are put into consideration. Right, the next one, when the national accountants add together the spending of 4 major sectors of the economy, C plus G plus I plus X minus M, what is that? It is the expenditure method. Goods and services produced in other countries and purchased by local. Come on, it's the opposite of that other one. It is imports. The economy is in equilibrium if leakages are equal to injections. When leakages are equal to injections, the economy is in equilibrium. What is that? It is the equilibrium. It's easy. This one is one of those that you can't get wrong. Look at the last one. The last one, you don't even have to read it, because it's there. This one. So even before I read, but let's see. Maybe it can open your eyes and show you that, oh, you got this one wrong. So don't work with the assumption that it becomes obvious. But yes, most likely it becomes obvious. Where consumers and producers make long-term deposits, yes, it is the capital market. And what's the opposite of this? The money market. So we can put the money market and change this word and make it short. And you see that this one, I saw it also somewhere there, right? This, the money market, the financial market has money market and capital market. So I can repeat this and change this word long and make it short. Then we can add 1.2.21 and we say money market. All right. Thank you for coming here to do, what do you call this one? Let's go to give a term or phrase. Now, learners struggle with this, but like I said, as we started, this one here is the most difficult in section A. But just know your terms. So terminology is the key. Let's see. Consumption of fixed capital. Consumption of fixed capital. When you consume a car, what happens? I've said it 1,000 times. When you consume machinery, what happens to machinery? It depreciates. Next question. A market where labor is traded. Is it the money market? Is it the capital market? Is it the foreign exchange market? Is it the factor market? Is it product market? Come on, the answer is simple. It is the factor market, because on the factor market we trade factors of production, and labor happens to be one of those. Next question. A flow that represents, or a flow represented by payment for goods and services payment. A flow. We have two options, real and money. And here we are saying payment, so it's obvious. The answer is money flow. Next one. The situation where a change, the one that I always say is small. Come on, you can't get this one wrong. A change in spending causes a larger than proportional change in aggregate demand. It's multiplier effect. Next one. A market where household savings are channeled through household savings. Where do you save your money? You save it in the bank. The bank is part of the financial market. Next question. The initial price in production of final goods before taxes and subsidies. Clue. Is it this or this? Did you get the clue? It is B. Basic prices. Next question. The amount to be paid for various factors of production used to produce goods and services. The amount that we pay for the factors of production. What is it? Is the factor cost. Next one. Production that takes place within the borders. Production. So gross production. What is it? What's missing? Is it national or it's domestic? Let's look at this word. Gives us the answer. So it is domestic production. Next one. The output of the output of a country produced by factors of production owned by permanent citizens. Okay, it comes back to this. What is it? It's national production, N, because we are talking permanent residents. Right, gross domestic product at current prices, GDP at current prices. Remember the bread, the 10 times 1 and the 10 times 2. Do you remember this? In lesson 6. Do you recall? Right, so gross domestic product at current prices. Clue. Is it R or it's N? It's N, nominal GDP. Right, so this brings us to the end of circular flow itself. And yes, this is the brand. Please make it popular, because at the end of the day, we are creating value. We are not just saying the distinction bound student. Yes, you as a student, I want you to get this thing here, an A, distinction. That's where the name came from. Because I might give you a bit of history. I've been producing distinctions before I started writing this book. So the fact that I was producing distinctions inspired me to start this label. All right, so thank you so much.